Welcome to the module on Conceptual Framework. Learning Objectives. Understanding the relevance of Conceptual Framework in financial reporting. Understanding importance of Conceptual Framework. Explaining the purpose of Conceptual Framework. Classifying fundamental qualitative characteristics and elements of financial statements. Introduction. A conceptual framework for financial reporting is an attempt to systematically organize the existing generally accepted accounting practice, that is, GAAP. It is a statement of generally accepted theoretical principles, which provide the basis for the development of new accounting standards, and also for the evaluation of those already in existence. A conceptual framework will form the theoretical basis for determining which events should be accounted for, how they should be measured, and how they should be communicated to the user. Please note, the conceptual framework is not a standard. Nothing in the conceptual framework overrides any standard or any requirement in a standard. Its aim is to clarify and offer further guidance on areas of the greatest subjectivity in accounting. Why conceptual framework is important. In the absence of a conceptual framework, some countries have developed standards in a haphazard and firefighting approach. It also means that fundamental principles appear more than once in different standards, resulting in contradictions and inconsistencies in basic concepts. This leads to ambiguity, and it affects the true and fair concept of financial reporting. A true and fair concept of financial reporting is essential to provide financial information about the reporting entity. Such financial information is useful to existing and potential investors, lenders, and other stakeholders in making decisions relating to providing resources to the entity. Purpose of the conceptual framework. Where an agreed framework exists, the standard-setting body acts as an architect of building accounting rules on the foundation of sound and agreed basic principles. The conceptual framework assists the developers of the standards, preparers, and users of the financial statements. It will support and strengthen standard setters against political pressure from various lobby groups and interested parties. Such pressure would only prevail if it was acceptable under the conceptual framework. The purpose of the conceptual framework is to assist the International Accounting Standards Board, that is, IASB, to develop international financial reporting standards, that is, IFRS, that are based on consistent concepts. Assist preparers to develop consistent accounting policies when no standard applies to a particular transaction or other event, or when a standard allows a choice of accounting policy. Assist all parties to understand and interpret standards. Fundamental qualitative characteristics and elements of financial statements. The conceptual framework further states two fundamental qualitative characteristics that make financial information most useful to users, which are relevance and faithful representation. Relevance. The information is capable of making a difference in the decisions made by users. Faithful representation. The information must be complete, neutral, and free from error. The framework also enhances following qualitative characteristics. Comparability. It is the qualitative characteristic that enables users to identify and understand similarities in and differences among items. Verifiability. It assures users that information faithfully represents the economic phenomena it intends to represent. Timeliness. It ensures that information is available to decision-makers in time to be capable of influencing their decisions. Understandability. It ensures that classifying, characterizing, and presenting information clearly and briefly makes it understandable. The conceptual framework lays out elements of financial statements. These can also be called as the 5 pillars of financial reporting. They are assets, liabilities, equity, income, and expenses. Assets. Liabilities and equity are the elements used for measurement of financial position. Income and expenses are the elements used for measurement of performance. More relevant details on understanding of these 5 pillars shall be understood in subsequent videos. In this video, we understood the relevance of conceptual framework in financial reporting and its importance. We also explained the purpose of the conceptual framework. We also classified fundamental qualitative characteristics and elements of financial statements.